Let's talk about the Forex market, but maybe not in the way you're used to today. We're going to venture off the beaten path a little bit to look at a more direct and, potentially smarter way to trade. We're going to go beyond the hub. Think about the global currency market like a giant airline map. For as long as most of us have been trading, the US dollar has been the main international hub, right? Almost every trade, every transaction seems to have a layover there. It's the standard route, but I want you to ask yourself, is the standard route always the best one? What if there's a direct flight? So first, let's just quickly cover the standard itinerary, the one that every trader learns from day one, trading the major pairs. When you trade a major pair, say the euro against the dollar, it's kind of like booking a flight where you have to connect through the US no matter what. Your entire view of the euro strength is filtered through the lens of the dollar. Same with the pound, same with the yen. The USD becomes the benchmark for everything, but just like any massive airport hub, this setup has one major problem, and that's congestion. And this right here, this is a trader's nightmare. Imagine the US economy is acting weird. Maybe the Fed is about to speak, or some data came in all mixed up. That's like bad weather rolling into the main hub. Suddenly the dollar starts chopping sideways, it loses its direction, and what happens to your trades? They get stuck in these frustrating holding patterns. All the clarity is just gone. So that brings us to the big question, doesn't it? If the hub is causing all this chaos, what if? What if you didn't have to fly through it at all? What if you could just bypass it? And that is exactly where we find our answer. It's time to talk about the direct flights of the Forex market, the minor currency pairs. So what exactly is a minor pair, or as you'll often hear it, called a cross-currency pair? Well, the idea is actually really simple, but it's incredibly powerful. You take two major currencies like the euro and the Japanese yen, and you just trade them directly against each other. The US dollar isn't part of the equation at all. It lets you make a clean, direct trade on the economic strength of one country versus another. Let's really break this down on the left. You've got the old way. If you want to trade the euro against the yen, you're secretly dealing with the dollar's influence in the background. It's like trying to fly from Paris to Tokyo, but having a mandatory and maybe very turbulent layover in New York. Now, look at the right, the direct way with a pair like the EURJPY. It's a non-stop flight. You're purely trading the relationship between the Eurozone and Japan. Simple, clean, direct. And, choosing this direct route isn't just a neat little trick. It comes with some serious strategic advantages that can really upgrade your whole trading plan. So, adding minor pairs to your arsenal gives you three main edges. First, you get independence from all that USD turbulence we were just talking about. Second, you can make these really precise, targeted plays on specific economies. And third, well, some of these routes just offer a lot more action. The first advantage is a big one. Think about those crazy days like when the US non-farm payroll report comes out. The major pairs can become almost impossible to read. Minor pairs give you an escape route. You can navigate away from that market weather and find much clearer, cleaner trends between other economies that aren't in the middle of the storm. The second advantage is all about precision. Let's say you've done your homework. You have a really strong opinion that the UK economy is going to outperform the Eurozone. Well, you can act on that directly by trading EURJPY. You don't have to worry about what the US is doing, muddying the waters. It allows you to trade your thesis and only your thesis. Finally, advantage number 3, performance. Let's be honest, some of these minor pairs just move a pair like GBP has a nickname for a reason. They call it the beast. It often has these huge daily price swings. Now, for a disciplined trader, that kind of volatility means more opportunities, more potential setups. Okay, so theory is great, but let's see how this actually works in the real world. Let's look at a case study and we'll take flight the euro/JPY. So here's the scenario. Let's imagine our analysis is screaming two things at us. One, the euro is incredibly strong, and two, the Japanese yen is incredibly weak. I mean, on paper, this should be the easiest trade in the world, right? Buy the strong one, sell the weak one. Now look at this. On the left, you've got the Euro USD chart, the view from the hub. It's just flat, choppy, going nowhere. But on the right, you have Euro, JPY, the direct route, and what do you see? A beautiful, clear, steady uptrend. So what on earth is going on here? Why the huge difference? It all comes down to one thing: USD noise. See, on this particular day, the US dollar also happened to be really strong. So when you tried to trade Euro USD, you were pitting a strong euro against a strong dollar. It was a stalemate, a tug of war. But by trading Euro JPY, you took the dollar completely out of the picture, and suddenly the true relationship, strong euro versus weak yen, was crystal clear. That right there is the key takeaway. Minor pairs strip away the noise. They give you a pure, unfiltered view, allowing you to trade the true relative strength of one major economy directly against another. No interference. So here are 3 strategies you can add to your toolkit right now. First, when the dollar is a mess, use minors to find some peace and quiet. Second, if you have a very specific view on 2 countries, use a minor pair to make that precision play. And third, if you're an action junkie looking for movement, go look at some of those high volatility minors like the GBP crosses. We've covered a lot today. We've looked at the busy central hub of the major pairs, and we've explored the advantages of taking those direct flights with the minors. But believe me, the world of currencies is vast, and our journey is definitely not over. Which leads me to a final question for you to think about. We've learned how to bypass the main hub, but what happens when you decide to venture off the main map entirely? What's out there in the world of exotic pairs? Well, we'll save that for our next session. Thanks for tuning in. If you're serious about completing this 365-day blueprint, hit subscribe and save this playlist right now. I've also pinned a question in the comments. Let me know your biggest struggle so I can address it in the coming lessons. I'll see you tomorrow. Let's get to work.